President Trump announced an extension of the ceasefire. He's maintaining and generously offering a bit of flexibility to a regime who has been completely tarnished because of Operation Epic Fury. There's obviously a lot of internal division. This is a battle between the pragmatists and the hardliners in Iran right now. Ultimately, the timeline will be dictated by the commander-in-chief and the president of the United States.
The extended Iranian ceasefire holds for now. The U.S. still waiting for Iran's unified response, but President Trump making clear he controls the timeline. Welcome to the Big Money Show. I'm Brian Brenberg, along with my co-hosts Taylor Riggs, Dave McDowell, Jackie DeAngelis, and with us for the hour, actually 2 hours.
Ooh.
Yes,
Maybe.
That's right. Host of The Fixer, Marcus Lemonis. It's always kind of a tryout, isn't it?
Yeah, it is.
We'll see how it goes.
Especially with Taylor.
Right now, the U.S. military is sweeping the strait for Iranian mines, a mission that could take 6 months to complete. Behind the scenes, international mediators are pushing to get both sides back to the table. A new round of talks could happen as soon as Friday. In the meantime, the standoff continues as WTI tops $93 a barrel. Marcus, are we kind of in a steady state here where for the next few months it could look just like it looks today? Oil up in the high 80s, 90s range. U.S. presence in Iran, in the Strait of Hormuz, not change much from what it is. Can the U.S. economy live with a steady state like this for a few months?
It can. It's going to be more expensive because as we continue to see oil at these rates, we're not going to see gas prices come down. And I think the American consumer has been pretty tolerant. What has turned into will be a couple of weeks to a couple of months now sounds like it's going to be longer. And right now, I don't know where the leverage is. I know that we say we can go in and blow everybody up and wipe everybody out. But right now, the Iranians, or at least a subset of their militia, doesn't seem fazed by it.
Dagan, I'm thinking, I don't know anything about negotiations with the Iranians, but I'm thinking about what they've got going here. And they've got this situation where it's kind of like on the Iranian side, we don't know who's in charge, and it's the hardliners and the not hardliners. And so there's this confusion, and we're sitting here waiting for a unified plan. I guess if I was the Iranians, I would not be in a hurry to solve that problem and buy myself some time. Is that what they're doing right now?
Well, eventually the money will run out, and that is one of the dual tracks which we've talked about. There is the military track, the blockade in the Strait of Hormuz, or outside of the Strait of Hormuz, and then starving, which is part of the starvation of the regime of its funding. And just looking at, this was from Javier Blas a few weeks ago, looking at the limited oil tankers, that the onshore storage, that Iran will need to shut in wells sometime starting today. Today to April 28th. This is the same process that all its Persian Gulf neighbors faced about at the beginning of the war. The question is, so from now, I think some JP Morgan analysts maybe threw out a timeline. It was a little bit further out, but based on, and Javier covers just the oil industry, and he is the best among the best. I will give credit where credit is due, regardless of whether they work for a competitor or not. So today to April 28th, that's when the wells when Tehran will have to start shutting down wells. However, Iran does have more money because the U.S. gave it a 30-day oil sales waiver in March. That only expired last Sunday, this past Sunday. Okay. So it was able to continue to sell oil on the open market that was at sea. That expired, but it might have kept the crude flowing and prices in check, but it also kept Iran in the fight. And the numbers that I have, I know that I was trying to bring this up yesterday, that the number that gets thrown out is like $435 million a day. But that is not the crude exports. The crude exports were closer since the start of the war to about $175 million per day that was getting out of Iran. And there's some question as to whether some of the ships are still getting out, but let's just call it a blockade. So watch in the next, say, 5 days to see how much oil production gets shut in and how much money really gets buried in the sand.
So you got a 5-day timeline on that, Jackie. We're hearing reports. I think the Pentagon has not disagreed with this number. It could take 6 months to sweep the strait. Okay, so when you hear that, does that tell you, we're just not going to get any meaningful transit through that strait, possibly for half a year, or you feel better about that?
I feel better that the operations have begun. I think anything that is worth doing can sometimes be painful, and we expect things to happen overnight. I was hoping, the mine situation wouldn't necessarily take that long, but if it does, then that is an important part of taking control of the strait. But I agree with Dagan. Now the Iranians are at the point where buying time for them, stalling this, dragging it out, it's going to hurt them more than it's hurting us. Oil right now is creeping up. So we're looking at it at 94 and change. Again, $100 is the mark. I don't want to see it go above. Let's see what happens with oil prices. But as long as it stays here and the market maintains, I'm actually okay with this strategy. If you keep that blockade in the strait, you squeeze them economically. Some people are calling this Operation Economic Fury. And I like seeing a dual sort of tandem approach that our assets are there. We can take you out on a military basis. But we don't necessarily want to do it that way if we can strangle you economically. And I think this fracturing that we're talking about within the regime, fracturing that can't come to a unified idea of what kind of deal they would make with the United States, their infighting is going to end up being their demise to a certain degree, because that is just a situation where you come to no resolution. Now you're getting starved economically. Karg Island is full of oil. You can't get the oil out because they're not letting you take it out through the strait. I think this is actually a really, really critical time. And while I was a little skeptical of the strategy yesterday, I've sort of changed my stance on it. And I'm saying, okay, let's see where this goes.
Does that mean if the market falls apart, you'll change your stance?
I may not. I mean, but that may be time that you consider a pivot.
But what do
as
you
long
mean?
as things hang out here, it means the market has confidence in this strategy.
But I'm going to let Taylor get in here, but what market? What part of the market are you talking about? Like stocks, treasuries, corporate debt? I mean, there's a lot of markets to talk about.
I was just going off of what she said, which is
About oil
as long
or
as the
equities?
market's okay, I'm okay with this strategy.
That's the number I wanted right there,
What
Taylor.
did you want? VIX?
Volatility.
19?
It's down.
Yeah, 19 is
So we're
nothing
talking. So we got all these problems, and yet volatility down. Why?
There was an index that was on a 17-day win streak that has never in history before happened. Which sector, what index would you think that would be?
Wait, what was the question?
I didn't hear the question.
Do you guys listen to anything I say?
I was looking at the chart. I was looking at the board.
I was tuned out on that.
There is an index that has been on a 17-day winning streak, the longest in its history. What sector do you think makes up that index?
I don't know.
The chip makers. It's the SOX index, the Philly Semiconductor Index, has just now, yesterday was the win streak at 16 days. Today it's up an additional 2.5%, which means in its 32-year history, this is the longest streak it's put together. And I say that because in that time period, it's jumped 40%. NVIDIA in the last 16 days is up 23%.
Couldn't have had a longer competition.
Jackie, you were so close.
So close.
I blame
But
the
it's
competition.
more importantly, it's on fundamentals.
Okay.
So let's talk about this. Strong earnings and optimistic forward guidance. So if you have the hyperscalers that say they want to spend $700 billion in AI CapEx this year, TSMC just reported record quarterly revenue and double-digit profit growth. ASML said strong bookings, continued demand for its systems. We're going to get Intel tonight. So I'm looking out. Software is a different story. Software is way down today. We'll get to that later. But hardware, shovels of what's making AI, what's making chips, are totally overlooking, and not just like overlooking the war, but are saying like full year out, we see more. I mentioned a company yesterday, GE Vernova, that said we got more demand for AI last quarter than we did in 2025 alone. So I guess I sort of look and dissect this market into little filters and see AI demand's there. People are spending, the chip makers are there. We posted record highs on most of the major averages yesterday. So that's at least an area of this market that is seeing Zero impact.
Why would you want it to see impact? I mean, at the end of the day, people are going to lean into it because they think it's going to allow them to run a leaner, meaner business. And so the general economy and the demand for AI, I don't think those are a great correlation.
Right.
My question to Jackie, because in her previous comments was, as long as the market is okay, I'm good with the strategy. Well, if the market is not okay, the general market, does that mean that you want the strategy to change? And that starts to feel like we're just making decisions based on financial engineering.
I hear you on that. It's not something that, listen, after Liberation Day and what we saw with tariffs, I think that market indicators mean a lot to this president. That in that particular situation, as Dagan pointed out, it was not necessarily equities or oil, it was the bond market that all of a sudden fostered a pivot. But I think what the president is doing is watching everything and leaving himself options. So even if he did pivot or he did decide if for some reason the market falls out of bed or oil starts to spike again because the powers that be are starting to get nervous about where things are going. He's got options about where he can take this. However, I will just caveat it by saying, I think the internal infighting of the Iranian regime will take them down faster than the market is going to get worried. Because they're also looking at this oil situation and saying, if you choke them economically, whether the number is 435 million or 100 and something million, when that revenue is not coming in, their country has been destroyed and taken down to rubble. They need that oil revenue, they need to pay their proxies, and they need to be able to, in order to get their defense systems back up and running, which we said this pivot period could give them an opportunity. You can't do that without money.
Right.
So you need that cash flow coming in.
I do think it's a good point, looking at market indicators. Market is data, right? It gives you data about what's happening in the world. It may be perfect, less or more perfect, but it's data, right? So when bonds don't, yields don't spike, when oil doesn't spike, when stocks don't drop, you do look at the confluence of those things and say, well, it means people aren't so worried about the long term of this thing. Now, they could be wrong, but I'm just saying that they're all making bets with their money based on what's happening in the world. And those three things plus more can tell you something.
Can I quickly add one more piece of data? Jobless claims this morning, literally like the flat line of the 4-year average. It's not, we are 7 weeks into this. And now we are in a low hire, low fire, but jobless claims are not picking up, and continued claims, which is a 4-week moving average, aren't picking up. So if you were if you were unemployed for a really long time and not being able to get a job, I would expect continuing claims to rise, and they're not. So either people are getting jobs or they're just getting off the benefits. But I look at that real-time data, jobless claims have not moved.
But low hire is actually good in this environment. A soft job market is good for inflation. And if you have higher oil prices, it's a necessary offset, a necessary balance or check to what would otherwise push prices higher. Also, longer term interest rates and bond buying, the people who are going to get screwed in this environment is anybody who is willing to lend to the federal government in the current rate environment. It's actually not stock investors. And what's bad for bond investors is good for the stock market, especially inflation. So if you need a buyer for U.S. debt, is going to wind up being the Federal Reserve. The Federal Reserve juices inflation with that bond buying. And actually, what do you want to own in that scenario? You want to own stocks, great inflation hedge.